Thank you. Thank you and good afternoon. My name is Frank Rote. I'm CEO of NomisSolutions. Prashant Ballapur is our head of product management. If you believe in better living through math, you're going to like this presentation. We're going to talk about pricing science, some really geeky stuff. And what we're going to show you is the Nomis Price Optimizer 4.0, which is our latest release of a large-scale nonlinear price optimization engine that over 20 banks globally have been using over the last couple of years to optimize interest rates and fees on products like mortgages, car loans, deposits, credit cards, unsecured loans. What we're doing with this product and what our customers are doing is fundamentally replacing Excel, email, and ad hoc models with a very granular process of understanding consumer preferences, consumer price sensitivity, and rolling that up into a structured pricing process leveraging large-scale optimization to determine what's the right interest rate to charge or the right fee to set on a particular transaction, a particular product market combination. How that works, Prashant is going to show us. We've created a hypothetical scenario. He owns a $40 billion retail deposit portfolio across money markets, savings, CDs, and I've asked him to increase the balances in that portfolio from $40 billion to $46 billion while keeping net interest income constant.
Wow, that's a pretty tall order. $6 billion in 16 months. So before Nomis, what I would have done is pulled out my 6 gigabyte Excel spreadsheet, poured over tons of competitive pricing data, maybe a dozen or so BI reports. And after having done that for about 6 days, I would have spent 6 hours on the decision. Clearly, there's a better way, and that's why we are here. What I have in front of me is the Nomis Price Optimizer, and I've essentially just created a scenario, and I'm going to look at how I get to that number. So what the workbench does for me is it puts all of the pieces of information that I need right at my fingertips. So I have my entire rate sheet. So in this case, it's a deposits portfolio. I have everything from checking to CDs, savings and money market in the middle. I have visibility into how I'm pricing relative to the competition. And this is from the Nomis Data Network, where we are working with syndicated partners to get information on a daily and weekly basis. We pull in macroeconomic feeds as well, and all of those flow into our predictive models, which then allow us to forecast out, in this example, 16 months out to say where this portfolio is going to end up. So let's look at how this is shaping up. If I do nothing, I'm at $40 billion, which is about a 200,000 per month run rate. What Frank has just asked me to do is actually get up to 500. So there is a white space there that I need to fill, and I need to figure out how to do it. And I have about a week. In this case, just a few minutes. So let's go back. And one of the ways I would do this is take one of my leading products, in this case a money market account, and start playing some simple what-ifs. So I might say, what if I were to raise the rates by 10, 25 basis points? So I'm going to go 10. Let's go easy. I'm going to simulate that. And then essentially what the system is going to come back to me is with a set of numbers, again, data-driven, objective forecasts for what that'll do to my book of business. So in this case, I know that I'm going to gain $1.5 billion, but then obviously I'm beginning to lose some margin. Not quite at the $6 billion that I need. Is there a better way? I can continue to play these one-off what-ifs, but there is a better way, and that is through the power of price optimization. So I'm going to now, through a single click, essentially establish a goal or a target that says that I want to get to, if I can count the number of zeros, quite a few, 46 billion, right? And I'm going to launch that off. And while that chugs in the background, I'll let Frank sort of explain the technology behind this.
So what's happening now is that on a big server in San Bruno, a couple of 20 miles from here, the optimization algorithm is actually evaluating all of the transactions that are underlying that portfolio. And that's about 2 million customers in 2,000 different pricing cells across money market, savings, CDs, different term bands, different regions, different balance tiers. And the algorithm is evaluating the price sensitivity of every individual. And in fact, we've probably scored most people in the room with something called the Nomis score, which is a price sensitivity score that evaluates how sensitive you are to interest rates. And at the other side, it's evaluating the profitability of that transaction, and it's rolling all of that up to determine what's the profit optimal price for every single pricing cell while evaluating all the cross-price elasticities that are happening within the portfolio. So what Prashant is showing right now is the view of regional price sensitivity down to the customer level which allows you to, or allows the algorithm to determine where do I increase rates, where do I decrease rates across the portfolio.
So let's see what it came back with. Again, if you think of that diagonal line there as sort of the point of no change, this is where I'm starting. My optimized scenarios, and I actually have a few here, essentially in a matter of seconds and minutes came back with a great starting point for me. Right? It's taken based on, again, an understanding of consumer level preferences, price sensitivity, and profitability. It has basically recommended a set of rate increases, i.e. markets, products, terms, tiers where I need to be more aggressive, the cells above the line, and those where I can actually withstand to take my rates down. So great. The key question is, did I make that $6 billion number? Let's go look. That's where I'm starting. 46 billion is about a 13% increase. And let's see here. Wow. That's pretty awesome. So what it's actually done is painted for me the so-called efficient frontier, where it has explored a whole series of optimal solutions, and each of these now I can go and implement in the marketplace. So in fact, the solution that I was looking for to get to my 13% increase, $46 billion without any expense increase is right there.
So each of these points is real. Each of these points has been deployed in the market. In fact, over the history of our customer base, our customers have optimized over $450 billion in transactions. This year, they'll optimize about $180 billion in transactions. And they've made, over the history, about $450 million in incremental profits, which is very nicely measurable. So if you pay your customers for deposits, which most of you do, if you charge your customers for loans, which most of you do, you should come talk to us, and we'd love to help you price in a smarter way. Thank you very much.